All right, guys, welcome to that would help. All right, guys, welcome to the live session. Hope you're doing well. Who we got? We got Naomi, Chris, Paul, Eric, Prasan, all the usual suspects. all the usual suspects. How's everyone doing today? Everyone good? Sipping my morning Red Bull. Bad habit. Bad habit. I blame Darren Oglesby for that. Hope you're all doing well. I hope your trading week is going well so far. Let me know if you're in any trades. Red Bull addict. I'm not an addict, I promise. It's just so easy to get into a habit. And yeah, this is one that I just seem to have rolled into somehow. Not good. Anyway, I drink lots and lots of water. I drink about 4 liters of water every single day. So that's kind of my counter for it. All right. Anyone got any setups or trades on the radar that they want to share with us? Let us know. I'm going to get stuck straight into the markets in just a moment. So, Duncan, you got anything? Paul, anything? Naomi, you got any trades on? No? Yes? Let me know. Just going to set my system up here so I can see where all the chat's coming from and stuff. So give me 2 secs and we're going to get stuck in. Okay. All right. We're going to get stuck in just a moment. As I say, if you guys have got any setups, let me know. If not, we are going to go over to the charts. How you doing? I'm good, thank you. Very well, thanks. How are you, Marco? How are you? What's missing? Something's missing here. Ah, the chat. Here we go. This is the thing that's missing. All right. Let's put the chat down here. And I'm going to share the screen. Push is looking at a setup. All right. Let's get the screen on then. So those of you who are new here, this is the London live trading session. We're going to go through 8 pairs: Aussie CAD, Aussie dollar, pound dollar, euro dollar, pound Aussie, pound yen, dollar yen, and New Zealand dollar. And as you can see here on the right hand side, all of these ones with a flag basically. So all the orange flag: Aussie CAD, Aussie dollar, pound dollar, euro dollar, pound Aussie, pound yen, dollar yen, and New Zealand dollar. And I've also brought on, some of you have been asking about brokers and Trade Nation in particular. So here is the charts from Trade Nation. And before I get, before I get stuck into this, I want you to know that it doesn't really matter what charting platform you use. It's really going to depend on your preference and what you do with it as well, because there's many traders who just use like a charting platform for analysis, okay, and then they just place their trades on a control center using an app on their phone, or a control center on another trading setup that's with their broker, that they kind of don't really get on with the charting package too much. But brokers are important, guys, and if you're going to pick a broker, you need to basically pick someone who you can trust, first and foremost. 2, that honors spreads, okay, and basically gives you the price that they say they're going to give you. And then you need to be able to have a connection with them. So you need to be able to ring them up. If everything's kind of, if you need to contact them urgently, you're going to need to be able to speak to someone without going through a ton of questions and security and, kind of getting to know you every single time you make a call. So this broker, Trade Nation, is one that I trust. I know the founder. I know I'm not pumping business or anything like that, but I have decided that this year is the year that I'm going to promote people I trust, because the amount of messages that I get that say, I've just got scammed by a fake account of you, or I went to this broker and got scammed, or I lost loads of money here. So look, if you don't use the people that I trust, then I'm sorry, but I can't, at least I can sleep on my pillow at night knowing that I've said, look, if you go to this person, I know they've got the best interest at heart. And if you don't, then I'm sorry. I really did try my best to tell you guys. So check them out. We're going to be looking through some of the charts today, and I'll show you guys some of the platform. We're just in the transition of setting up the Liverum account as a separate account in Trade Nation charts as well. So as we're in that transition, I might as well show you some of that. And it's nice and clean. It makes a change from the bright whites, which is a bit glary for some of you this early in the morning. All right, there's quite a few people here now. How's everyone doing? Morning, Tony. So Push is looking at a setup on the euro, and it's an advanced pattern, cipher pattern. So we'll take a look at that in a moment when we get onto the euro dollar. Morning, Jason. Recently joined and on the 90-day plan. It says book an accountability session. I'm literally doing the education you guys offer and practicing on backtesting. Is it right to book an accountability session in that stance? Paul, you want to book an accountability session as soon as possible. One of the things we're trying to work on is getting people to be accountable as early as possible. Lots of people, whenever you buy a program or you go and work with a mentor, or you hire a coach, or you buy a course, or you buy anything, the reason you've bought that is because it's not high enough on your values to master it in your own time. You've gone to seek it, and you're basically learning from someone who has dedicated their life to mastering it. And what that means is you're not going to be accountable. Otherwise you would have created the program. So if you haven't created the program that you're taking, you need accountability. It's as simple as that. It's as simple as that. Because every single time that it gets a little bit uncomfortable, you're going to ease off the accelerator. It's kind of like being attached to a rubber band and you're trying to reach the wall on the other side. And as you get closer to the wall, the rubber band gets harder and you just snap back. You kind of, every time you try to get, does anyone feel like that? Anyone relate to that? Morning, Lewis. Lewis Porter's in the house. Morning, 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 morning. So I would book on as soon as possible because it will just light the fire in your belly. One of the three values of my company are transparency, contribution, and growth. And what that means is the first bit is transparency. And what that means is vulnerability, laying your cards on the table. That's the first thing you should do. And if you go into my Facebook group or you go into my my programs, the first thing you're encouraged to do is lay your cards on the table and get accountable as soon as possible. Why? One, because you're going to connect with the other people much quicker. You're going to benefit. The benefits are you're going to have much more benefits from the community that way. Two, you've opened up and you're honest about where you're at right now, so you can only get better from that point. Free, people are more likely to help you if you're open and honest and vulnerable and not trying to pretend that you're better off than you are. And 4, it basically is liberating. It's liberating for you to really verbalize where you're at. It's a real powerful, powerful thing to do. Naomi says, yeah, I think for some people the drive is innate, but most people it isn't. Or the reasons for wanting to trade are quite superficial, so they don't persist through the challenges when they come. Absolutely. Yeah. And look, no one wants to go to the gym and lose weight and train and all that kind of stuff either. Or few people do. The ones that do have six-pack bodies and they teach people how to get in the gym or they hold others accountable, right? Very few people want to run marathons and do Ironmans, but some people love it. But the ones that don't love it and want to do it, they need a coach and accountability, and they get in a group and a community and all the rest of it. So if you're not naturally waking up, like working on something and mastering something, then, anything else, that isn't your thing. Whatever you're waking up thinking about mastering, that's your thing. Anything that you're trying to learn to get better at because it's in your best intention for the future, that is something you're learning from someone else who has mastered it. So you need accountability until you're the person that can do it. John says, I find people get caught up by the honeymoon period. They start to learn trading, but as soon as it comes tough, the real grind, they lose momentum and give up. Yeah, or they just can't admit to themselves that it is actually hard work, and they go, oh yeah, that strategy doesn't work. I'm going to go and learn something else. I'm going to go and find another strategy, or I'm going to go and learn from this educator or this guru, or I'm going to try another system. Or what they teach you can't be right. Right, it's never them, is it? Like you're never in the bar in the pub, and then you talk about like personal training, and you're not really getting any results. What's going on? I thought you got the personal trainer. They never go, yeah, it's just me. They always say, yeah, it's not very good. The trainer isn't very good. Or I took this Facebook advertising course and it wasn't really good. No, what they mean is you didn't actually apply what you learned. Because it's like people don't teach stuff generally, like people don't teach stuff that hasn't proven to work for someone, because why would you? Like, why would you just put all the energy and effort into making a course or a program on something that doesn't work? Like I've never known that. That's why I always say there's thousands of trading strategies and they probably all work for someone. But it doesn't mean you're going to make it work. John says, I also have problem changing strategies every day. This is going on for 2 years now. Any tips? Wow. Tier 1 guys, what tips would you have for someone who keeps changing a strategy every day for 2 years? This is my advice. I can see this session turning into a rant session rather than a trading session, but we do have some nice opportunities here. If you want to be a consistently profitable trader, you have to be consistent. If you're, like the clue's in the title, right? If you're chopping and changing your strategy every day, immediately you're breaking consistency. And I want you to consider this real kind of home-hitting, radical example. Let's just say that you wake up every day and at 7 a.m. you buy the euro dollar and at 8 a.m. you sell it back. Okay? And that's all you do. That's your whole strategy, right? So you buy the euro dollar at 7 a.m., you sell it at 8 a.m. You don't place any stop losses, nothing. No target orders. You just do what I just said. Would you agree that that's consistent? Would everyone agree that that's consistent? Of course it's consistent, right? You're doing the same thing every day. It's like Groundhog Day. Right. Now, at the end of a 12-month period of doing that, do you think you're going to have consistent results? Absolutely you are. Okay? There's going to be three different outcomes. You're either going to be in profit over time, you're either going to be at a loss over time, or you're going to be at break even over time. But the most important thing was the consistency. Now, let's just say that you're break even after a 12-month period of doing that same thing every day. That is amazing. I'm not saying that anyone's going to do this, but I just want you to consider this when you're thinking about consistency, because this is all it is. 12 months of doing the same thing every day and you haven't lost money. Amazing, right? Because now what you can do is you can take that system and go, okay, where did I hold for too long? Where could I have put a stop loss to avoid losing too much? Where could I have tightened stops? And you can tweak the system to make it profitable, and then you're profitable. Job done. Very easy. If you're losing money over time, then okay, that doesn't work. Again, reevaluate the system, but tweak it so it is consistent. If you're earning money over time, perfect. You've got a consistently profitable system, and you don't need to change it. Why do you need to change it? It's consistent. It's consistently making you money. And you've done the same thing for 12 months. You buy the euro dollar at 7 a.m., you sell it at 8 a.m. That is not a strategy that I advise, by the way, in case you've just come on. That is not a strategy that I recommend, but I'm using it as an example, as a radical example, to get the urgency and the importance of consistency across to you guys and what trading's really all about. It is literally picking a pattern that happens frequently in the market, building rules around it so that you can capture a move that's in your favor in terms of risk-reward profile and your risk appetite and your personality and your lifestyle, so that you can actually trade it on a right time frame and everything. And once you've got that system and you've tested it to be profitable over a 12-month period or 100 trades or 5 years or whatever it might be, then you can go forward and know that you are doing it as long as you're consistent. As long as you trade exactly how you tested it, you are going to be profitable, or, you've got the best chance of high probability that you're going to be profitable over time. Now, if you're changing the strategy every single day, what do you think that does? It goes against everything I've just said. One, you don't know. Well, look, one, you're not doing any testing. So you haven't got the most important thing in trading, which is, aside from consistency, the most important thing is psychology and being able to master your fear and your greed and your emotions in the market. If you're chopping systems daily, you're not testing anything. And testing is the only thing that gives you that certainty in your system. And trading is 90% psychology. So you can see you haven't got consistency, so you're on a back foot. You haven't got the psychology, so you're even more on a back foot. And the biggest elephant in the room is, why are you chasing different systems? Now, if it's to do with your personality and something doesn't quite resonate, first of all, stop spending live money. Stop spending money live in the markets and figuring it out live. That's just ridiculous. There is no need to lose money trading. Let me say that again. There is no need to lose money trading. It's one of the very few businesses that you can get a positive expectancy and a projected forecast of what your profits should be like if you just stick to a plan and almost guarantee that profit going forward based on historic results, than any other business. It's one of the few businesses where you can do that. And there's no excuse to blow money in the markets if you approach it the right way. Because by the time you go live, you should know in your heart of hearts and in your mind that that system has produced like this in the past, and this is what it's expected to produce like in the future. Now, all I've got to do is trade exactly like I tested it. And I know I sound like a scratch record, and I'm never going to stop I'm never going to stop. You can come back to this channel or this live session in, 10 years, 20 years, I'll be saying the same thing, I promise you. Because you can't argue with it. No one has given me an argument yet. At which point, I want to just go on another little rant here. And I know we haven't looked at any markets yet, but I want to go into another little rant here. And the rant is, this argument that I get is, what if you're just more of a discretionary trader? What if you're just more of a, you just kind of learn as you go type person? Well, I'm telling you, you can't do that. I've never met a trader who is just making it up as they go along who is profitable. And believe me, I've spent time on some of the best prop firms, couple in London, couple in New York, and I've never ever met a trader that has just left to his own devices to go, oh yeah, we've just funded that trader. We've got anything up to $25 million in trading capital at risk at any one time, but we just let him do what he wants. He just seems to nail it. Said no risk manager ever. Said no prop firm ever. Said no business ever. You cannot do that. You cannot do that. And here's why, just to kind of put the nail in that coffin, right? Your job as a trader is to execute a trade plan flawlessly and then build on your tiny little edge that you've developed and refine it and refine it and refine it and refine it. If you don't have a system that you're trading to the, to the point, you are not going to be able to measure whether you're trading it flawlessly or not. Okay? So if you need a point to which to measure your consistency, how can you trade something flawlessly where the goalposts are changing every day? What about Nav at Futex? I've never heard of him or her, but all I know is this. You can't do it. And if there is anyone out there that's done it, it has been based off of a refined edge that's been refined so much over the years that started as a consistent strategy, and now they kind of, you know what I mean? Now they know the breathing patterns of their market so well, their system so well, that they're actually dynamically, refining their edge live in the markets. However, if you're journaling your trades, as every single professional trader does, if you're not journaling your trades, there's no business. You're not a business. It's sporadic, it's random, you don't know what's going wrong, you're not keeping tabs on numbers, you don't know if something's deteriorating over time, so everyone keeps numbers. So my argument now is, when you're journaling your trades, right, if you don't have a consistent system and you're just making it up, how do you then optimize? Because your edge is deteriorating every day. Bit of an enigma? Yeah, there's no enigma. I promise you, it's no different to some fitness guru who's telling you can get, lose weight by eating, I don't know, starving yourself, or cabbage, or, the ones that go hard on keto, or, all these kind of faddy little things. It's no different to that. They're not showing you the full story. I promise you. I promise you. Why? Because that enigma sells. Truth doesn't. Truth doesn't sell. Look at this. Look at my YouTube channel. 55,000 subscribers. Been banging on that channel for about 6-7 years. It's a grind. It's a grind. There's been Forex educators that have come out after me, and And basically, they sell a shiny object, and they go from 0 subscribers to 200,000 subscribers in a year or 2 years. So, you know, I don't do this, like this live stuff for money. I don't do it for money at all. That's the power of being able to just tell the truth. I don't care how many subscribers I get. I just want integrity and to look my kids in the eye and go to sleep at night and go, I've said the right things. And that's it. And then guess what? All of the people that get burnt very quickly by these other people out there who have chased shiny objects, they can come back to my channel at any time and go, he's right. They'll listen to one of my videos and go, that's why I went wrong there. That's exactly the feeling I had by chasing that. That's exactly what I experienced when I lost that money. This is exactly what I should have done. And those are the messages that if I put out there for years and years and years and years and years, I can sleep well at night. So yeah, I don't care how long it takes me to get 100,000 subscribers. What I care about is I say the right thing. And I'm here to help you get better at trading. And trading is a vehicle for wealth acceleration. So if you want to build wealth, right? If you want to build wealth, the last thing you want to do is lose money, right? I'm here to help you build wealth, not lose it. So I don't care if you listen or not. Hopefully you do, but sooner or later you're gonna resonate with something that I've said. I promise you, if you get attracted to these shiny objects. All right, I think that's the rants over. Jesus, half hour in, we haven't looked at a chart yet, and we've got all these kind of beautiful markets to look at. Has anyone got any setups that they want to share with us before I get stuck into some of these? The integrity piece comes across, Jason. It's what attracted me to the platform. Amazing. Good stuff. If you see me jolting my head around, it's because I've got like mobile phone here and everything so I can see comments. Look at the pound yen. Pound yen. Anyone in the pound yen or dollar yen? Not open my charts yet, says Tony. Yeah, we've got a busy week fundamentally, so you want to be mindful of that. And that's kind of why I'm not rushing into it. A lot of this stuff is not tradable, for me anyway. Name of my company. I run a company called Graystone Education. I also co-founded a company called Tier 1 Trading. Andrew Gibson says, I struggle to journal a day of scalps with scalped entries and exits. Would it be useful if I did a YouTube video on journaling? Because I think this is a big thing that comes up. Would it be useful if I did a video on journaling? I caught pound yen Monday hammer. Nice. What time frame was that, Lewis? Currently we're streaming on Instagram, YouTube, and ShareVision and Tier 1 Trading. The reason I'm streaming again today is because it cut off yesterday. So normally I'll just do it on it like a random Tuesday, but I'm not on Telegram. Well, I am on Telegram, but I don't use it. Okay. So I only use it for my own personal development if I'm part of a group of a product I've bought or something like that. I do not contact anyone Telegram, WhatsApp, Discord, Facebook Messenger, Instagram Messenger. I do not contact anyone. So if you've been contacted and you say, hey, how's your trading going? Send me $500 and I'll put it into Bitcoin. That is not me. All right. And I can't believe people aren't cottling on to this now. There's so many fakes out there. This is just like usual goings on now. So just assume every single account is fake, and that's the best way, because I'm never going to contact you anyway. So anyone who does is a fake. Right, I'll do a video on journaling. I'll do a video on journaling. How to do it properly. Okay? But I'll only do it if you guys share this video and share this channel and like share the love. It's got to be two-way. People are very fake. A few swing trades are easy to document, but 15 plus multi-entry scalps, I'd be journaling for hours. Look, if you don't journal, how are you getting better as a trader? How do you know the numbers on your business? Like, how do you know how to optimize your system? How do you manage your emotions? How do you know you're not taking excess losses? How do you know you're not taking errors in your trades? How do you know you're in every trade that you should be in? How do you know where your system's deteriorating over time? If you're not tracking any of that stuff, you're not approximating what we call a gross performance discrepancy, which should be 0 all the time. I was a tier 1 member years ago, been profitable for a while now, all thanks to you and Akil. Thank you with all my heart. Amazing. Thank you, Raf. And it was a pleasure, absolute pleasure working with you as well. Amazing to hear you're profitable and it's all going amazing. I'll smash like on journaling guide, sure. You have to journal on backtest, yeah. All right. Look, I think this session's going to be more about like topical discussions. So how about we do this? Let's take a quick flick through. But what I want you guys to do is, and I'm only going to do this once, I don't know if I'm going to do this again, but any topic you want to discuss, anything you're struggling with as a trader, anything you've got a little bit of a niggle in your ear and you want more information about, or you just want an opinion of, let's open those conversations up today. All right, let's dedicate this session to really drilling down on little pieces of information that are missing, that you feel is missing and you don't get from anywhere else, or is, you know, not commonly heard. And as I'm going through these, we'll take a look at some of these setups. Duncan says, quote from Mike Bellafiore interview on the tier 1 training modules: anyone who does not journal is not trading, they are gambling. Yeah, that's Mike Bellafiore, everyone. Founder of SMB Capital did something like their best trader. Their best trader did $27 million in profit last year. They've got 40 traders. And if that best trader stopped journaling their trades, he'd kick them out of the firm. I know that because I know what Mike's like. I know Mike very, very well. Euro New Zealand, continuation to the downside, says PA 1987 Gaming. Cool, we'll take a look at that in a moment. How do you like to trade, fundamental and technical analysis or just technical? My trading executions okay, are built up purely from a technical standpoint, and then a fundamental will keep me out of a trade, okay, or it will allow me to, if it aligns with my technical analysis and I'm in the trade, it will allow me to manage the trade slightly differently. And I'll be able to actively manage the trade to extend targets, squeeze more profit out of it. Okay, so I never place trades on fundamentals. I stay out of trades on fundamentals, or if I'm in the trade on my technicals and the fundamentals play into my technicals, then I manage the trade differently. Does that make sense? Those are the two rules. Those are the two approaches. Okay, cool. So Aussie CAD, this is the daily time frame. Whoops, I keep leaving this this tool on. Let's go down to the hourly to see how price is behaving, because I think there was an ascending channel here. Let me just bring this down. If you look here, we can see there is a ascending channel which has started to roll over here. Okay, so if you haven't caught this already, then you know, tough. But this was the ascending channel into previous structure, and the where you're looking to take targets on this would be at the start of the channel. So you wait for the double top, which would have been this candle here, 93.91, and you're looking to take targets down here at 93.59. All right, and that's where your targets would be. So if you guys are in that, good luck. Let me know if you're in that, or if you trade ascending channels or not. This was really the only setup on the Aussie CAD for me. So I'm going to go over to the Aussie dollar and take a look at the Aussie dollar next. Why don't you trade dollar CAD? Is it something you found in your testing? I do trade dollar CAD, but only on my swing trading account. And I used to, back in 2014, I think, 2015, I intraday traded the dollar CAD. I actually had a very, very good trade, about 600 pips on dollar CAD. It was a very trending pair, a very directional pair, and and that is a perfect example. I managed to catch a trade that was purely based on technical analysis, and then we had, I think it was Yellen speaking or someone. We had a news announcement, and I think they said that they were, you know, they were printing more money. Basically, they were you know, diluting the dollar, and the dollar it just went up. The dollar went up, and I caught about 600 pips from that move. I remember it very, very clearly, and it was a great trade. The reason I stopped trading it on my intraday is because the trades that I would, you know, the setups that I were trading, there wasn't a lot of opportunity on the dollar CAD for me. There are great opportunities on there, you know, but it just didn't weigh up. It didn't tip the scales in terms of time and the amount of time managing it for the profit that it was generating using those systems. For me, doesn't mean like anyone can earn money off any pair. Anyone can earn money on any pair. Fading news spikes works well at the moment. Yeah, I just wouldn't trade off the news. Yeah. Most of the time, the news has been priced into the market anyway, and we get snapbacks to, as you say, mean reversions. Mean reversion is nothing new. Mean reversion is essentially what mean reversion. Does everyone know what mean reversion is, by the way? A mean reversion is basically the midpoint between the two extremes over a long period of time. So an average, almost like an average. And what we mean is over a long period of time, what you find is that sorry guys, the mic went there. Over a long period of time, what you find happens is you get markets that are booming and then markets that are busting. You can see it in recessions. You can see it in the dot-com boom. You can see it in all these kind of, you can see it overinflated right now. You can see the crashes that happened in COVID, in GFC, all the rest of it, right? Now, what happens over a long period of time is it will approximate a midpoint in growth. And that midpoint is what everyone should want to approximate in their trading and in their equity curve, right? You want to basically perform as close to that as you can. Now, whenever we have these big news events that come out, we see the market spike up, and what Lewis is talking about is a reversion back to that mean. Okay, so whenever we're a certain percentage above the mean, then we're likely to revert back to that mean. And the quicker we shoot above the mean, and the further away from the mean that we get, the faster the snapback. And the same the other way. If we have a big crash, we're likely to revert back to the mean. What I will say is this: you revert back to the mean from a boom quicker than you revert back to the mean from a crash. Does that make sense to everyone? And all you have to do is look at historic price charts to see how that works. Because what happens is, this chart that we're looking at in front of us right here is a reflection of human behavior. Okay? All of the markets are driven by human behavior. Every single candle here tells a story of human behavior in the market participants' reactions to news, etc., etc., etc. Now, let's go back in time and talk about human beings and how we're more fearful than we are greedy. Okay, so we are, as humans, more fearful than we are greedy. What does that mean? It means that if you're a caveman or a cave woman, right, and we're just out in the wild and we've got our cave behind us and we're starving hungry and there's an apple tree 100 meters away and we need to go and pick some apples to eat, but there's a lion halfway, we're walking halfway to the tree and there's a lion, we see a lion, we are more likely to run back to the cave and we'll happily stay in that cave for a few days until we know it's safe, and then we'll slowly creep out and we'll go and get the apples. Make sense? How does this work in the markets? Well, as soon as there's any fear, we crash. Okay, so has anyone heard the saying, the bears jump out the window and the bulls take the stairs? This is exactly the same philosophy. And you can see it represented in the markets. Look at this big crash here. Okay, so we've got this big crash over 1, 2, 3, 4, 5, 6, 7 candles, 8 candles. Big crash, fast crash, and then look at the climb. By the time we get to break even, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, about 40 or 50 candles to get back to break even, and it's a much more gradual climb. Can everyone see that? Pretty straightforward. So whenever we boom above the mean, the reversion snapback is quicker than when we crash below the mean. It takes a long time to get back to the mean. Make sense? Okay. How's this important in investing? Well, in investing, right, when we're booming above the mean, if you're making regular deposits into an investment account, what you want to consider doing is has anyone heard the term, be fearful when others are greedy and greedy when others are fearful? Warren Buffett, you might have heard of him. Okay. Everyone heard that? What that means is when the markets are booming way above the mean, you want to be fearful because everyone else is greedy. What that actually looks like is position sizing. You want to minimize your position size or reduce your position size the further you go above that mean. Okay, if you're looking to invest continuously. And then when we crash, you want to have a rule similar where you increase your deposits the further we go below the mean. And what that means is by the time that we get back to break even, so in this instance here, right, we've had this big crash and we've got back to break even. In this instance here, what most financial advisors will tell you is, well, when we get back to break even in 3 or 4 years, just ride it out and you'll be back to break even. Well, I don't want to be back to break even. I want to be in profit by the time we get there. Make sense? And the way you do that is by having that strategy. So what that looks like on let's just pull up the SPX 500. I'm not sure if we're going to be able to see it on here because this color, let's just change this to pink. No, it's this one. Come on. No, it's not that one, not that one. Okay. So as you can see here, here's the bears jumping out the window. The bull's taking the stairs. Now, this is a graphical representation. Let's go out to the monthly, okay, so we can get a bit more data on here. Everyone see this okay? So all of these red boxes here are the bears jumping out the window, all the different crashes that have happened historically. All right, now this is back to what, 1970? And you can see right now, so this is the mean. It's the mean growth of the market. And every time we're above that is a percentage above that mean, and we revert back to the mean. And every time we're below it is a reversion back to the mean, upwards over time. And the best thing you can aim to do is approximate this mean growth. Now, as you can see at the moment, which is really why it's important, because at the moment we're at a time where there's going to be the biggest opportunity to make a hell of a lot of money in the markets, in the stock market. Once in a 12-year, maybe more. This is going to potentially be worse than the GFC in terms of how we see the crash, but the best chance to make money. What we're seeing is we are way above. We were about 22% above that mean. We're still above it right now. So right now there is a strategy that you can use in order to really capitalize on this, especially on the next crash, and you want to be ready for that. So be sure to get into my other training on stock investing and stuff like that. Get into my Facebook group and you'll hear a lot more about this stuff. But I'm not going to go into too much now. All right, so look, we've been waffling on. I appreciate we haven't looked at too many of these charts. What I'm going to do is do a quick coffee refill because we've been going for almost an hour. I'm going to put 10 minutes on the clock. So we're going to come back at 8:30. And if you've got any questions in the break, fire them in. And we'll come back at 8:30 to resume this. Go and grab a coffee, grab a tea or water or whatever. And I'll see you in a moment. All right, guys, welcome back to the second session of the live room. Hopefully you're doing well. Dropped a couple of links in there. One is to my Facebook group. Lots of you asking about the investing stuff. You'll learn more about it in there. You can also join my Discord channel or server, which is Tears of Freedom. Or I've also dropped a link there for the wealth test, which will basically profile you as where you're at and what you need to work on next. It gives you a personalized report and video for you based on your, it'll give you a whole roadmap. John says if that wasn't dangling a carrot. Yeah, I don't want to get too much into investing stuff in here. This is a live trading session, so I don't want to deviate too much from people who are here for trading. We've got a lot of traders here as well, so... let's get stuck into some of these charts. I didn't see... Phil says, was that your own music? Yes. Yeah. Yeah, Philip says, loving the beats. Yeah. Yeah, those of you guys who don't know, I produce music as well as, you know, one of my passions is music, and I produce a lot of music as well. So that's, yeah. Those are mine. And those of you who are interested in music production, there's going to be an opportunity to follow something else that I'm doing on a bit of a passion project on that as well. And yeah, so stay tuned and you'll hear all about that. In fact, this actual thing, let me just see if I can show you guys. Will that go there? It probably won't, actually. Probably won't. There you go. So this is my music desk. This is my music production desk. So if you stay tuned, you might hear... you can tune in and find out a bit more about that. Totally off topic. Totally aside from anything that we do on here. Anyone got any questions? Anyone got any questions so far? Going to a spa. How often do you stream these live rooms on YouTube? There's no real kind of set time. I do this every day, Tuesday, Wednesday, Thursday in the live trading session in tier 1. Sometimes it's a lot more active than this, obviously, and then every now and then we decide to stream it on YouTube. How do you plot the mean on the chart? Is it by eye or is there a tool? No, you want to get the two mean price points at certain dates and then plot a trend line on the chart that way. No, you definitely don't want to do it by eye. You want actual numbers. One more thing I want to share with you guys is I'm running some strategy sessions, wealth strategy sessions, one on Thursday, one on Saturday, and one on next Thursday. If you want to get in to one of those, you can literally go and sign up for one, and we'll spend about an hour and a half together putting together a plan for you guys. What do you think about this update, Jason? Analysis of pound Aussie. What are you looking for? A short? Rudy? I'm short pound yen. Would you consider this a swing high? Let's take a look. So pound yen. Let's go to the pound yen. That's an interesting one, right? So this is the daily time frame. Okay, daily time frame on the pound yen. And what we're seeing on the pound yen is a massive spike. We've had 1, 2, 3, 4, 5, 6, 7, 8 bullish candles in a row. Strong bullish momentum. If we just bring on, if we just measure this move here, we've basically, we've pushed up. It's a phenomenal move, right? Strong bullish momentum. We've broken and closed above previous structure. So these structure highs looking left, we broke a close way above. And if we're to get a pull back down to this level, previous resistance should become support, and there could be a buying opportunity there. However, if we're looking at this from a, let me just go to my white charts because they're a little bit clearer for me to see from this distance. So let me just go over to pound yen and go to the daily. If we're looking at this, I've got the same analysis here anyway. Long term, we want to see where we're at in terms of price historically. So if we bring on a horizontal line and just pop it in where we're trading right now. Okay, so 160, just above the 160 level. If we now scroll out, you can start to see whether this is a major level of structure or not. Now, if we just go out recently to, this is 2016. You can see that we held, when we last tested this level, this significantly held. Like this level was tested and hit like a brick wall. Okay? And previously, before we broke to the downside and pushed up and test that level, it became support. So when we pushed down to that level, it became support. We then consolidated, broke and closed below, pushed back up, it became resistance, and we've never tested that level since. Now before 2016, if we go back to 2013, let's look at what happened at this. Let's look at the story here. You can see that we had resistance as we came up to test it. Following all these years went by, we came up, tested this level, we got rejected, we had a nice double top there. We broke and closed above it. Whenever we break and close above major levels of structure, we see a big bullish momentum candle, which we saw. We pushed back down and it became support, as expected, right here. And then we rallied away. And we didn't ever test that again until 2016, when we had the same situation. And now we're testing it again in 2022, which has, been a long, long time. And here we are. So if you're a counter trend trader or a structure-based trader, this is a very, very nice area for a short. Would I just short it at a drop of a hat? No. What I'd look for is confirmation. Okay, so what ways could we look at, or what filters could we look at here to make this a real high probability entry? First thing I'm going to say is the RSI. Okay, the RSI is 85 or 84.4. So that's considered massively overbought, right? We've also got price action giving us this indication of a high test candle wick. So we'd have to wait for the close of that candle for that confirmation of that, because we might close above. This might turn into a bullish candle. Okay, but at the moment, it's looking like this hammer candle that we drew on yesterday, right? Now, other things you might pay attention to is where this candle closes. And other things you might pay attention to is even handle number. Okay, so we've got 160 flat. We are bang on 160 flat pretty much. Psychological even handle number, major structure resistance, high test candle wick, lower third close, right? Pin bar, following a strong bullish run, which can't go on forever. RSI overbought. Okay, is that enough to enter? Maybe it is enough to enter for you. Now you've got to figure out your, what's your prediction? Where's market likely to go next? Well, following this kind of, based on this analysis, I'd be as aggressive to say that we're going to roll over to this previous resistance level. Okay. So next thing, how can we get involved? That's when we go down to our trading time frame and we start to build a case or look for an entry criteria. 3-bar reversal. Does everyone know what a 3-bar reversal is? A 3-bar reversal is a bullish candle followed by an indecision candle or a doji, followed by a lower low, lower close candle, bearish candle. This is what's setting up for a perfect, absolute textbook 3-bar reversal at a major structure level, an even handle number, daily confirmation of a high test candle, daily confirmation of a lower third close, daily confirmation of RSI overbought, on the 4-hour overbought as well. So we've got confluence there. We're at 96 overbought on the RSI. And we got a 3-bar reversal as our entry technique. Now, this is still considered quite an aggressive entry because your stops need to go an ATR or a fixed pip position above the high of the 3-bar reversal. But either way, if you're taking targets down at, let's just say that we close here. You're going to have to wait for this candle to close. You don't want to get in just yet. But let's just say that you enter here and your targets are conservatively above that level. That's going to give you a 1.2 to 1. So then you have to weigh up, well, is that worth it? Is that worth it? Or do you wait for a double top? Whoops. Because if you wait for a double top, then you're waiting for the pullback, and then you can get tighter entries, maybe up here, with your stops above the high, and then all of a sudden it becomes a 2.8 to 1 or 3 to 1. But either way, this is a very, very nice opportunity. You've just got to be a little bit patient before you look at getting involved. And yes, this might go and rally, fall off a cliff without you. But that's just trading. And that's the importance of journaling and post-market analysis, which is our topic for today's coffee break. If you're subscribed to the Trader Coffee Break YouTube channel, myself and Akil will be meeting up at 10 a.m. Eastern Standard Time to talk about post-market analysis. So if you want to really immerse yourself in the world of trading, get stuck into that channel as well. There's lots of great, I think there's like 20 odd videos on there already. Great discussions on trading topics that you just won't hear anywhere else. Cool. PA 1987 Gaming says Euro Aussie little flag downside continuation. Sure. Euro Aussie. I take it on, well, I don't know what time frame you're looking at. If you do have any setups, please make sure that you give us all 4 pieces of information. So the market, the strategy, the time frame, and the starting point, the impulse point or the X leg or the, where the pattern starts. The price point of where it starts. Watch them all. Great content, says John McLachlan. Yeah, good. I'm glad. It's very different. There's not there's not anything that I've seen out there like that where you kind of just have in-depth discussions on certain topics that people just don't talk about. You know, it's not really, it's important topics, but it's just not widely discussed or taught or included into programs and things like that. So it's kind of a nuance discussion of nuances, which is kind of what we set out to achieve there. And I'm glad you're enjoying it. It's the Trader Coffee Break. It's a different YouTube channel, separate YouTube channel altogether. Check it out. Cool. Anyone looking at anything on the pound Aussie then? Because the juice of the trades, okay, are pound yen. Pound dollar's rolling off a cliff. I'm interested in this level here on the pound dollar, but we've probably not got much to talk about in terms of, you know, it's going to be basically a structure-based setup there, looking to buy support at previous resistance. Nothing's happening at the moment. Aussie pairs, there's a bit of a flag here on the Aussie CAD now, if you trade breakouts to the upside, but nothing that I'm going to be looking at trading. Pound yen's a juicy one. Pound Aussie's another great decision point if we break this low. Okay, so if we break and close below 77.37, this is going to be a nice indication that we're likely to continue short, and we can start looking for bearish setups there. Pound yen we've already looked at. Dollar yen, here we go. We was looking at this structure set up yesterday. Okay, so said we're likely to push up to this zone. If we push up to this zone, stops would go above 121.65, shorting back down to previous structure, resistance becomes support. And that already played out. You could have caught that on the 60, or you could have caught it as a day trade there. But was looking at getting in up here, shorting down to the low, which was a very quick trade within the hour. And you was at targets. So well done if you caught that. Now we're in dust settling phase again. Another compression channel setting up where it's another typical break to the upside trade. So you might be taking another, reload at that. For me, I'm not looking at anything on this right now. And New Zealand dollar, it's just, yeah, I'm not interested. We had a double top on the New Zealand dollar. Let's just see where we've had that. I didn't even perform any pre-market analysis on this morning. Yeah, no. Not at a level that I'm interested in at all. No setups that meet my trade plan rules on this. So the juicy trades for today, a pound dollar, if we can push down to 132.09, 132.10, I'll be looking for a buy. Euro dollar, I'm not looking at anything. Aussie pairs, not too much. Pound Aussie looking for a break and close below this low, or a hold, which could be a long opportunity. Pound yen looking for a free bar reversal or a double top, depending on the reward to risk profile on the free bar reversal. And then dollar yen, that trade's played out, move's been made, and New Zealand dollar, nothing. So that about wraps up everything we're looking at this morning. As I say, it's a busy week fundamentally, so there's not too much to talk in detail about. There's a bit of anticipation there, a bit of dust settling going on, and uncertainty, which should be ironed out in the news. We've got lots of news out today, tomorrow, so you want to be mindful of that, and that should shake things into action a little bit more. If you guys want to look at anything, or you've got any setups that you want to share with us, let us know. David says, pound New Zealand buy, bro. Awesome. Are you telling me to buy it? Are you buying it? Let me know. If you're buying it, let us know what your reasons are for entry. Give us a detailed breakdown of why. Because if you can't, then you're just taking a punt, right? You're just gambling. And this isn't about taking punts. Euro yen looks nice for shorts, like the daily, which has taken out those highs on the daily, now rejecting June 21 highs, waiting for a 4-hour close below previous candle, wick low to look for shorts. Nice. There you go. There's a bit more detail for you. Nice work, Lewis. Where's my hoodie, says Tony. Tony, I think that was sent to you a long time ago. Cool. All right, guys, look, whatever it is you're looking at, I hope it plays out in your favor. I hope you've enjoyed this session. If you have, like the video and share it, and I'll do that video on journaling for you. And you guys in the Tier 1 trading session, I'll see you guys back here tomorrow, and I'll see all of you inside the Trader Coffee Break, 10 a.m. Eastern Standard Time, 2 p.m. UK time. Go to the channel now, subscribe, the Trader Coffee Break, subscribe it, hit the notification bell so you get notified when they're live, because they're live. They're live sessions. They're not pre-recorded. So you join in live on the discussion, and I'll catch you guys later on. Take care.